Hello everyone, welcome back to the Gold Technical Analysis session with Mukmik. So yesterday I sent you two signals, we missed one and we hit our stop loss one, but the other one that we hit our stop loss, I said that we need to reduce our risks. Why is that? I will take you through what happened yesterday. Okay, so this is about where we were yesterday, and I said that we do have our demand zone here, if you remember this green area, and we had this pattern which is the high twice for the Bravo Gold strategy that we had in our course, and I used my Fibonacci extension, and if you remember, this is where we are waiting yesterday, so around between 1823 to 1818, and then the price came really close, so I dropped down to another time frame to see the price action. And what happened was that we do have another high twice here, so I use my Fibonacci extension again, and I do have this smaller enter point which is at 1820 point something. Okay, when it go back up it makes another high twice, and I need to update my swing. So there we go, that's the price that I sent out in my telegram, which is from 1820 point something to 1818. Okay, so it's gonna save our stop loss for a little more, so that's why I decided to send out these signals. All right, but what happened was the price did not really come down. It doesn't even touch our blue zone here, so I said, okay, we need to cancel this order because it will not gonna come down to where we were waiting. And if you notice, we do have this low twice instead when the price going back up. So I use my Fibonacci extension here, and the price I got for you was sell gold at 1832 and 1834. So I'll put the blue zone here for yesterday, but I said that okay, you can enter this point, but be careful, there is a risk here for selling gold. Why is that? Because the price have been sending up from this demand zone, and it also formed this reversal pattern, which is the classic divergence as well. So that's why we need to be really careful at this point. But we can sell it here, because if we go back up to the 1 hour time frame, you will see that we do have our resistance here, which is around 1833 point something, which is in the range that we will go for a sell. Alright, and we do have our supply zone up here as well, and that's where I put my stop loss. So I put the stop loss above this supply zone in the 1 hour time frame, which I sent out at 1838, around like 100 points from our supply zone. Okay, but what happened was, look at that. We need to be really thankful for our stop loss, otherwise it shoots up really high. All right, and that's really dangerous. So that's done for yesterday. There's always reasons, okay, for entering at any point. So let's see what I've got for you today. Actually, today we sent out a signal for buy gold at 1832 to 1830, stop loss 1824, and take profits at 1840. Okay, why is that? I will take you through. Alright, so if we go back up to the daily time frame, the yesterday's candlestick is deciding again. It is still in this deciding phase. Alright, so this candlestick could be either bullish reversal bar or bearish reversal bar. All right, so the gold market is still in the deciding states, and as you can tell in our daily time frame, it is still being in a sideways. Okay, so we don't have anything much from here. That's the supply zone. If you remember, I said almost every single day. All right, and that's the demand zone of our daily time frame. Okay, so let's drop down to the 4 hours time frame. So in the 4 hours time frame, this is where we got our entry point. If you remember this, the price have bounced from this demand zone of the daily time frame. Is a very big time frame, all right, and the price have formed this pattern. This, if you remember, this is the QM pattern. If the price have break this trend line, all right, so we got around this. This is the rough trend line that I would put, and also make a higher high than this swing high. We will have our QM zone. Where is it? I'll use my Fibonacci retracement. So where we will enter would be somewhere around here. So that's the reasons of this signal. Okay, so we can enter from 1832 point something actually to around 1829. Okay, so we need to add a little bit up for the spread, because here it said 1828.56, so we need to add a little bit up. So we sent just 1832 to 1830. All right, so that's the reason for this signal, and that's done. All right, very easy for today's plan. But be careful, don't put all in. You still need to being really disciplined with your money management and risk management. Why is that? Because in this time frame, if the QM pattern is good, then we got to take the profit. If not, the price might continue to form this broadening formation again. Okay, so we need to have our stop loss. Don't move it. All right, everything has a reason there. So I hope you learned something from this video. If you do, please give it a thumbs up and share it with your friends, and also click the subscribe button for us. Thank you very much. If you need a confirming signal, we do have our Telegram, which is BUBI project. I will leave the online registration link down below, so you can just go in there, fill in the form, and we will process that for you. All right, so I'll see you in there. Bye.